Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars, is for informational purposes only concerning Market Chameleon tools and products. With that, D, good Friday morning, my friend.
Good morning, Will. How are you?
Good.
Good morning, everyone. Let's start out by sharing my screen here. And today I'm going to cover a tool that helps us analyze analyze an open interest change or open interest changes in a particular stock symbol. And so we could just get some insights, what happened with the open interest after you have a look at days of trading activity, because not all trading activity will translate to a change in open interest. And the open interest lets us know where positions are being established, where there are contracts that exist that still are out there that people have a risk or position on that they're managing. And what this tool will help us do is kind of just get some insights on where we see changes in open interest or potential buildups in positions. So to do that, we're going to go to a stock symbol. So I just picked Apple here. If you type in Apple up here in the search, you will land on this summary page. And what we're going to go to is under options. Let's go to this activity section over here. We'll click on activity. And this will bring up a new page of options activity. I'm going to close this menu to expand our screen. And we got a couple different tabs up here that we could go through. And what we'll do is actually, let's just jump to this open interest tab up here. And here, what we see is a table, and it's organized by the different options expirations that are available to trade. And you could see here they're ordered from the most recent or the ones with the lowest DT or days to maturity to the ones with the furthest out. And reading from left to right, we have the total open interest for that expiration. And then we have the 1 day change. Did it move up or down? And then we have this cumulative 2 day change, 3 day, 4 and 5 day change, which gives us an idea. Is the open interest, in the last week, let's say five trading days, is it grown, and by how much? If we look at 4 or 3 days as well. So where they're in a particular expiration, if there are positions that are increasing, okay. And we also have a breakdown here, the percentage of calls and puts for that expiration. So that's the percentage of the open interest that are in the call options, then percentage in put options. So let's say we wanted to go a little bit deeper into it, and let's say we wanted to see this change in 1 day, and just give us a visual of where that change occurred, because now we have different option strikes, and we have calls and puts within the expiration. Okay, so how do we dig deeper and see how was this change, increase in 142,000 contracts? How is that distributed? Was it, a lot of it in one particular option, like a, particular call and a strike? Was it evenly distributed? Was it distributed, equally between calls and put options. Like, how did that look like? Where did the positions increase? Okay, and or even decrease. So we're going to take a look at this, and let's do it in a graphical format. So I'm going to click on this, the 142,811. We're going to click on it, and now we get this visual. Okay, and the visual looks the following. Up top, you have two graphs here. You have one for call options, one for put options. Okay, so the top one, these are the open interest amounts for the calls by, and you could see by strike. So keep in mind, we're looking at the January 31st expiration. And these bars here, they're stacked. The total bar tells us the amount of open interest on that strike. In the calls, the graph below tells us the open interest, the total open interest by strike in the puts. And the bars are stacked in a way to allow us to see if that open interest increased or decreased. So you could see here, for example, on the 250 strike, we have a yellow and a green. So the yellow represents what the open interest was the day prior, and then the green added to that open interest, right? So when it looks green, it increased. Okay, if a red would be a decrease like this. Okay, so red would say that was the previous, now came down by that amount. And this allows us to just quickly see, well, what's going on here? You know, what's going on in Apple? Well, in the calls, right, at least in the up top here, we see there's a lot of the largest open interests are like between the 240 strike and let's say 260 strike. And it looks like yesterday they all increased around those strikes, you know, either like stayed the same or increased. So those positions, outstanding positions increased, and probably, you know, the largest one right here was on the 250 strike, followed by the 245 strike, and you can see here up to the 260 strike. So a lot of probably trading and activity that translated to an increase in open interest. And Apple, I think, it reported earnings right yesterday. Well,
Yep.
Yeah, it reported earnings yesterday. So it's up 4.2% in the pre-market. So you could see went from 237 to 247. So if we look at it actually from the perspective of, you know, yesterday's closing price, these were a lot of that open interest actually would have been in upside calls, right? So those are call strikes that are above where the stock closed. And it looks like right now in the pre-market, it's trading right at that 250 strike, if I'm correct, or close to 247. So over here. So this just lets us know, okay, were there a lot of positions now on that, you know, on those options. We know that Apple just reported earnings, and there could be now activity around those strikes, you know, because people are holding positions, and you know, they'll be either rehedging them, closing out of them, liquidating them. But there's a decent amount of open interest there. People are holding positions on those strikes. They only have today, really, they're going to be expired today, which could put pressure on those options. What about the puts? So the puts, very similar. We could see here that the largest concentration of open interest in the puts are between the 235 and 220 strikes. So it's looking at the out of the money puts. And those options, those open interests also increased. See here, the biggest increase was on a 230 put. Oh, I'm sorry. Biggest increase was 235 put, but the biggest open interests are on the 230 put. So just coming in, based on this expiration, it looks like open interest were kind of split between out of the money puts and out of the money calls, based on like the price of the stock closing right here at 237.5. Right, so that's where it was, and yesterday's positions increased on those strikes. So that's kind of a quick view of what happened in the as far as open interest in that expiration in Apple, which was the biggest increase, 142. We could do the same thing on the other ones. So let's take a look at the open interest relative on a relative basis. So I'm going to click now on this total 586,000. Okay, and we get this different view, different graphical view when you click on this. Okay, it's not the change. Now it's just showing us the call, total call open interest, the total put open interest, and it also gives us these numbers on a relative basis where it says, well, if the open interest on this strike, so based on this particular strike, 240, 245, 250, we see the total open interest. And if all that open interest converted to stock, okay, so let's just say, all of it, the stock is in the money, and if it's in the money and all these options become assigned, like at expiration, that means that it gets converted to stock, right? So look, one contract get converted to 100 shares of stock. So if all these options get converted to stock, what percentage of that stock would translate to an average daily volume, right? So how much stock are we talking about here? If it's a little bit, it might be insignificant relative to the what on average the stock volume trades, because the stock volume is here 36 million, right? But if it's a significant amount, let's say you have this option that's out of the money, right? Like let's say we had this 250 strike. Well, if the open interest on that 250 strike is so significant that once you cross that strike, what if it translated to 30 million shares of stock, or 50 million or something like that, where it's far exceeds even what on an average day this, because what happens is now you have all these options that went from maybe low delta to high delta, so that triggers potential rehedging, or you got like now you got people getting assigned on stock on the short side. You have people who even on a long side now what do I do with the stock? Do I if I get converted, do I want to hold the stock because your intent maybe was just to hold that option? So that could really accelerate the movement of the stock itself, because it triggers a place or a inflection point where now you have people who need to start rehedging, right? So there are people who might need to do things in the stock, in the underlying itself, because of these derivatives, these options. All right, hopefully that makes sense. All right, you have these options that are all of a sudden, whoa, they're worth a lot. And if you just compare them to, like, the delta, the gamma of these options relative to how much stock is trading, right? Then you could say, well,
Hey,
the
hey,
options
D.
market itself, yeah.
I'm sorry. So, we just had a question pop up. I know there's a delay. Could you just go through the clicks to navigate to this again?
Yeah, so when you land on Apple, right, you have this menu. Under options, click on activity, and then hit open interest tab. Okay. So the idea there is to spot, so this represents these percentages of saying it's the open interest represents 5.4% of the average daily option in Apple. This is saying 5.7%, 4.7. So you could maybe not even have it on one particular strike. But if you have a cluster of strikes that are close together, let's say the 250, 252, 255, even if those 2, 3, maybe 4 strikes very closely clustered together represent a big percentage of the average daily volume, they're in the money. Well, what can happen is that the options markets themselves, due to the nature of their derivatives, and they get converted to stock, can become a large influence on the trading activity in that stock. Okay, it triggers trading activity, beyond where fundamentals, right? It will, for example, if you have a typical stock, you have these fundamental people are trying to reprice the stock based on all these news events that are coming out, forecasting earnings, revenues, whatever it is, relative value. So all these different models and trading strategies influence the price of this and the activity in the stock, right? To find new fair value. But you can end up in a situation where that activity itself could be I guess triggered by the just open interest in the options activity, right? You reach the point where, whoa, there's a lot of open interest here, and it's breaking through, and people are forced to start rehedging, and especially if you have such a high open interest that the competition to rehedge and that mechanism, like, just overwhelms just basic liquidity in the stock, right? So it's like you have a certain amount that trade on average per day, and then all of a sudden you have a demand for trading more stock than usual. So that would be something to look out for as the stock is trading. And here it doesn't look bad. Like right now, it doesn't look like a crazy amount, especially you probably have more trading around earnings anyway, more liquidity there. But that's the idea behind there, is to see, okay, Apple reported earnings, how does that open interest look like, especially on expiring options, right? Because these options themselves, at the end of the day, will either be in the money, converted to stock at expiration, or they'll be out of the money and worthless. So that's one way to just kind of keep an eye on that analysis. Another one, let me just come back here for a second. On the main tab, we also see the open interest by expiration. And if we click on here, this will give us a different graphical view. What this shows us is for that expiration, stacked calls and put open interest by strike. Okay. And then this shows us how the open interest in this particular expiration built up, leading to the most recent dates. So you could see here, there was little open interest, but as we went on from day to day, it kept increasing. And here we're at, the largest January 30th, 52% in the calls, 48% of puts. And to kind of on this graph here, real quickly, this stacked call versus put, call plus put on a strike could also be important because with options themselves, there are a couple ways to trade. You could buy or sell an option, just hold it. But another way is a professional trader looking to trade the realized volatility versus applied volatility is that you're trading the gamma and vega and delta of the option. So a large open interest on the strike, right? It doesn't matter it's a call or a put. Right? Just the large open interest on the strike can trigger rehedging. Because if for market maker, let's say, or specialist, if you sell a call or a put on the same strike, it doesn't really matter because you're going to have that gamma and vega and delta risk to rehedge. Okay, so from that perspective, if you're taking off the directional risk, it still triggers rehedging around the strike. So it could be a call or a put, but as far as like a specialist or market maker, what's important is, okay, what is my Greek exposure? So selling a call or put, you're going to get this similar Greek exposure that you have to rehedge. So that's why we look at the stack one where the 240 strike itself has the biggest open interest, right? It wouldn't matter call or put, for a market maker, it's more like, well, what's going on that strike? People in general more pumping up implied vols or pressing them. So, well, I think I'm going to end it here because we went over a couple different ways to analyze the open interest using these graphical tools.
Yeah, that was great, D. Thanks for bringing it. As always, everyone have a great end of the trading week. Remember to like us and follow us on YouTube. Great job as always, D. Thanks.
Right. Thanks, everyone. Have a great weekend. Stay safe. Have a great trading day, and we hope to see you guys on Monday.
Trade in peace, community.